So hello again everyone and welcome out to your weekly currency room. This is Ankit here and we'll be breaking down this week's price action and talking about our upcoming week ahead. So let's get into it. Let's take a look at the headlines first, do our top-down analysis, take a look at what's going on in the broader markets, bring it down into our currency baskets, and then talk about our possible setups for the upcoming week. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at the markets from last week, not a whole lot changed. Everything seems to be doing well. Equity markets continue to push higher. The S&P again breaks above that key 5K level. That's a big one this week. So the equity markets are on fire. We're seeing that same thing across the board, just not outside the US, but looking at Japan, looking at broader markets, everything is moving higher. On the other hand, the US dollar and the bond yields, they remain strong. So this is again, we're seeing markets kind of moving independently. Now, no changes from RBA, but we are getting some positive data, especially out of the New Zealand and Canada, that both of their employment data was pretty good. Let's look at the numbers. So no surprise from the US. So let's just start with Sunday. We had the Fed Chair Powell remarks on Sunday night, and that was hawkish. So that definitely helped the US dollar. That did rise those bond yields. Now, starting Monday, we still have, again, positive data from US as well. So again, US data is all bullish. Now, looking at the Australian employment, ART rate statement, that was at par as expected. No changes. And we didn't really see Aussie go that much higher or lower after that. Now we are seeing the employment change out of New Zealand. You can look at that. A drop to 4% compared to 4.3%. And the employment change was more than expected as well. Now looking at the numbers out of Canada this morning, look at that. 5.7 unemployment rate fell to 5.7 from 5.9. And they also had a big jump in employment change. The expected was 16K. Now it's sitting at 37.3K. So these numbers again telling us that the economy is strong across the world. Things are doing okay. And I think that's really where we are as far as the market sentiment goes. Now let's take a look at last week's events. Looking at the market performance, you can see, again, continuing to push higher. S&P up 1.27%. Take a look at the World Stock Index up as well, 1.11%. Crypto had a huge move, 8.68%, gold pulled back, and then oil market, again, flip-flopping back and forth. Last week it was down 7%, now it's up 6%, so a lot of back and forth. But where we are seeing the consistent move is in the broader markets. Take a look at the S&P chart. We started off the year here. You can see that pretty much from here, we are just continuing to move higher. Some pullbacks in between, but those pullbacks have been just a buying opportunity. So right now you can see we are sitting at the highs of the day. It just continues to push higher. This is where we say when the outlook is +3 and there's not a whole lot of overhead resistance, things can continue to move higher and higher. And the only time we'll see the pullback is when we get some reversal signs. And right now, there is no sign in sight here. So continue to be on the bullish side. That's what the trends are telling us. Now, looking at the performance in the currency market, you can see a big move in New Zealand dollar. So we can see that both the Aussie and Kiwi has done poorly. But again, got a big surprise out of the Kiwi. Traditionally, this is where a risk on sentiment, we see the money goes into these growth currencies. But lately, currencies have been doing its own thing. They're not moving along with what the broader markets are doing. So this is where very important to pay attention to relative strength and weakness. So Kiwi on the upside here. We'll take a look at the chart and see what we have expected for upcoming week. But outside of that, you can see Aussie was slightly up. CAD was flat. Pound is flat. Euro is almost down. Flat to slightly down. So the big movement. So let's talk about what's moving. The yen is moving. Dollar was flat as well. Swiss franc is moving. And the Kiwi is moving. So remember, we need to focus on where is the trend taking us? That's really where we need to be piling on. Don't trade things that are not going anywhere, but trade things that are moving, just like how we see in the equity markets. When things are on fire, we want to get back on this bandwagon and ride that move. So we'll take a look at Swiss franc, yen, and the Kiwi when we look at the charts. Now, in the crypto market, you can see we are now sitting at a solid gains in Bitcoin at 11.52%. Again, big move Ethereum as well, and Bitcoin Cash and Litecoin following suit. So the crypto markets again goes in these periods where it does really well, and then it just goes sideways. Going into this week, there was no indication, but then here we go, big move there. So always, if you're trading the crypto markets, make sure you're following the trends and following the momentum. So let's take a look at market analysis and see where we are. And again, no change, sitting at a +3. This is very bullish as far as the market environment goes. So until we see a change in the score, we don't want to be changing our outlook. And that's really where we want to go from. Now, let's talk about other areas. So we already looked at what the broader markets are doing. You can see it's very bullish. This is where markets deviate from how the things were moving, especially last year in November, December, where yields were pulling back, but then the markets were going higher and the dollar was pulling back as well. But that's not the case, because take a look at bond yields. This is 10-year yield, and we are sitting up right against that resistance. So this is again telling you that dollar might be following what the yields are doing rather than following what the broader markets are doing. And that's exactly what we're seeing, the dollar being in this consolidation phase. But keep in mind, the inflation here, the data is actually, we'll take a look at next week, because we have inflation data in focus. So we could either get a breakout or just a fall down from here. So next week will be a big week for the US dollar and the bond yields. Now look at the crypto. We were sitting sideways, not going anywhere, but look at the last 4 days of move. That started from right here, and here we are, 1, 2, 3, and 4 candles up. And this is where, you got to keep in mind, that's how crypto moves, and a lot of times when it really catches your attention, you want to go long at that time, and guess what happens? It pulls back. So right now, we're seeing a nice move here. We'll probably see a bit of a base or pullback before we want to get into. Remember, in trends, pullbacks are a great way to get into. But we don't want to be entering when things move like this. It turned around, and you can see after that, it just never went up to the previous high. So both pullback patterns we want to look for in a trending move higher. Now, looking at the data for next week, again, the inflation data, like I said, is going to be the big focus. You can see the inflation data out of Swiss franc, out of Switzerland. We have the inflation data out of the US. We got some inflation data out of the UK. So there's a lot going on. We have some data coming out of US, again, PPI on a Friday. We got the inflation expectation coming up from New Zealand. So there's a lot to focus on, especially as far as the inflation goes. If those expectations come out, lower or muted, we could just see the markets continue moving in the same direction that's moving. So those are the ones we need to pay attention to. Outside of that, we have employment report from Australia. That's what I'll be focusing on. And we also have some data from the US, again, retail sales, the manufacturing number. And remember, these numbers are important, especially if you're trading the US dollar. So Thursday will be another important day if you trade the US dollar. But throughout the week, I think it will give us decent opportunities into next week. So as we look at our outlook for next week, there's no signs of markets slowing down. So let's not speculate on when market's going to top. We'll let the markets do its own thing, follow the trend, and when it's time, when it gives you a sign that, hey, things likely to be pulling back, or we have a reversal sign, that's the only place we will slow down. But till then, we'll just continue moving higher. But inflation data, like I said, is the one I'll be focusing next week. Those are the ones, economic reports that we just went through. It will be pretty much every day we have some data that will give us some good opportunities. So let's get into some chart analysis here. Let's take a look at currencies. So starting with cryptos, let's start with Bitcoin. And you can see that Bitcoin, all these cryptocurrencies were sitting at either a 0 or a -2, and the score just flipped from a -2 to a +2, or 0 to a +2. So everything kind of looks the same. Bitcoin Cash, Bitcoin itself. Let's just start with Bitcoin here. You can see that we are back at the resistance that we were at back before we just peaked early January. So just watch out for these levels. So far, velocity and trend score is matching, which means it is continue to move higher until we see a score change. Bitcoin Cash, it's lagging a little bit there. Bitcoin, taking a look at Litecoin, is lagging a little bit there. But Ethereum looks a little bit better. But I think outside of all the currencies, cryptocurrency we looked at, I think Bitcoin looks the best. But again, this is where you got to decide, are we going to continue moving higher? Because we still have to clear that overhead resistance, which will be the next hurdle for a lot of those cryptos here. So let's jump into currencies. So in currencies, you got to take a look at what the trend scores are doing. It's very important as you go into the week with your strategy selection. I know a lot of traders want to short the dollar because you think dollar wants to go lower. But right now, again, not seeing that in the chart. So remember, chart will tell you when it's time to go long or to go short, and when things are going sideways, that's what tells you. So far, we had a nice breakout after a long consolidation period. So this is again telling you that consolidation are tight, which means that you don't want to be continue shorting that. So far in the dollar, every little pullback into the downside has sort of recovered. So trend score hasn't changed. Pullbacks are good buying opportunities. I don't really like the dollar short here until or unless we see the yields start to go down as well, which again I'm not seeing because all that data that's coming out of the US is strong. So maybe that's not where the short is. Remember, we always want to pick which one looks the best as a short, and look what we have: the Japanese yen. So stop trying to short the dollar, but you have a clear short out here. Is the Japanese yen? Take a look at that break. So we are now broken below this consolidation phase. Look at the velocity sitting at a -3. This is a short that we want to go after. So next week, continue looking for the yen to be the short side, not just the dollar. Now, Swiss franc is following suit here. Take a look at this one. Swiss franc, again, we always find a bit of a tough one to trade because this currency doesn't follow any sort of correlation. But you can see that the Swiss franc has done really well. But now we're seeing the score turning into a -2 and the velocity staying at a -3 as well. I like this on the short side. Doesn't matter what your opinion is. Let's go with charts, and charts is telling us to the downside. On the other hand, take a look at euro. Euro is going sideways. That's why I want to take advantage of that Swiss franc weakness by pairing against either the strongest currency, or even we can pair against the euro, which is where is quietly deviated from in the past year or so. The British pound kind of going sideways, so let's just put it on the side here. Not the currency we want to trade. And we have the Canadian dollar, which overall, if you take a look at it, it's moving higher. It's +2, but it's not moving higher like how the equity markets are, where it just continue moving higher. It goes higher, it comes back, and then it goes higher, it comes back. So any pullbacks, I want to be buying on that Canadian dollar on this pullbacks, but so far I don't love this as a short. The short movements are really short-lived. You can see there are more green candles there are compared to the red candles. Now let's get into growth currencies. So Aussie, well, despite of what the equity markets are doing, what the trend is telling us, weak. It's staying weak. It's in the low base here. In the shorter term, is higher velocity, is going higher. But again, we don't want to be jumping on trades where the trend score and the velocity scores are conflicting with each other. Now look at the turnaround in the Kiwi. Kiwi was sitting at a -2, so nothing looked good as per a chart goes. So if you're kind of feel like the FOMO that I missed out a move on the Kiwi, just realize that this was not a trade that you would jump on because just chart wise, it was terrible. We had a big move in the last 24 hours, but it's taking us back to the resistance. So remember, we need to clear overhead resistance in order to continue moving higher. So this one goes on the watch. I know it's a +2. We need to be a little bit more careful because we are against the overhead resistance. Once we clear out the resistance, I will be more than happy to jump on and continue moving higher. So the score is a +2. This thing so far looks pretty bullish here. So maybe look for some consolidations before we can move higher. Kiwi looks so much better compared to the Aussie. So this is where maybe we can take a look at Aussie Kiwi pairing and take advantage of that deviation from its correlation. So trend score is pretty clear what's moving and what's not. Aussie, Swiss franc, yen moving lower. Kiwi, dollar, and CAD now is in a +2. Euro and pound not going anywhere. Let's keep it on the side. So these are the pairings we're going to take a look at. It's pretty clear to me what we're going to be looking at. Now, looking at the velocity score, you can see a day like today, or even throughout this week, Swiss franc and yen has stayed weak. Aussie is a +2 right now. Kiwi is a +3 right now. So Kiwi is the one. Maybe we'll start pairing Kiwi against the Swiss franc or yen, and maybe bring it down to the other currencies as well, especially Aussie and the Kiwi, as the trend scores are quite different from each other. There's not a whole lot of deviation from euro and the pound, and dollar staying at a -1. So let's jump into the charts and take a look at the setups. So looking at our possible trades ahead.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And here we are in a trading view. So let's just jump in and talk about some of the currency pairs we need to take a look at. So Kiwi, as you can see, we have quite an overhead resistance. Don't love going long at these resistance levels. Either maybe just pull back and kind of go up. Maybe that's the trend we want to take a look at, but just be careful of this resistance level. Now, same thing goes with the dollar. Be careful trying to short the dollar here because it's still above that prior resistance, which is now the support. So things that looks more clear to me, maybe more Swiss franc to the downside, and maybe yen to the downside. So what do you want to buy? That's a big question. Well, outside of the Kiwi, what else do we want to buy? Well, because Canadian dollar is pulling back a little bit, but maybe we can take a look at Canadian dollar crosses as well. Don't want to buy the euro and the pound going sideways. Maybe this is where you're resorted back to the USD. So let's take a look at some of the currency pairs. Dollar yen. This thing has broken out of that resistance. You can see a clear breakout above this level. So at this point, I still like it to the upside. Where's the level of resistance? As 151, 152. So this is the one that I like, especially off this consolidation. You can see a nice little high base setup. So, going dollar long, dollar yen looks the best, followed by dollar Swiss franc. You can see very similar setups. Remember how weak dollar Swiss franc was into like late last year in November, December. You can see here we are breaking above the resistance. So pretty clear to me, dollar long, dollar Swiss franc, and dollar yen. That looks the best. On a 4-hour chart, bring it down, consolidation here. So I like this more in high time frame. You can see all pullbacks were just a buying opportunity. So that's the one pretty clear to me. Now let's go over some of the other currency pairs, like the Kiwi Swiss franc. Kiwi Swiss franc, you can see beautiful turnaround. Let's start with the daily chart. You can see that daily was sitting at a -2 and then it just jumped to a +2. So the scoring looks better, but again, we have the same issue running into that overhead resistance at 54.02. So as much as I like it in the short term, daily charts telling me, well, there's an overhead resistance that we need to watch out for. So how about the other ones? Well, you look at Euro Swiss franc. This looks quite interesting to me here because you can see that it went lower, a bear rally, went lower, and this is where it really turned. Now it's making a higher high with a higher low. So this is the next level of resistance, which is right at about 94.70. If it gets above that, I think this can easily get towards the 96.50 area. So look at the moving averages trying to converge over there. This chart, again, looks really good, especially if you want to hold it for a little bit longer. I don't like this on shorter term time frames. I like those on 4-hour charts, especially a 4-hour chart here. You can see base and went higher. So this is what it's moving. So trade what's moving in front of you. Outside of that, let's take a look at CAD Swiss franc. We got a pullback in CAD Swiss franc today, but take a look at that daily chart. What is it telling you? We got an overhead resistance. Look exactly where it stalled. So if this stays over here and recovers, I like this further to the upside if it breaks above that 65.20 area. So these are the ones I really like. Again, Aussie remains a weaker one. We don't want to be. I don't love the Aussie long here. I don't really love the Aussie short here. But remember, you have to really decide, okay, what currencies are moving and what you want to go against. This is the one that's not moving anywhere, so I don't really love it. So dollar yen, dollar Swiss franc to the upside. We got the Swiss franc. We like it on the short side, so we take a look at it against the euro, and we like yen overall short. So it doesn't matter what currency you are trading. We take a look at maybe the outside of the dollar yen. You can look at CAD yen or Kiwi yen. So things look clear to me. So instead of speculating, just go with what's moving. I find it much easier than trying to call the market tops or bottoms. It's easy to be in these moves that are happening, and you just have to make sure you have your good risk parameters in there. Make sure your time frames are clear. 4-hour charts are working really well right now. I don't like as short term, but for 4-hour charts, it allows you to stay in a move for much longer, and it's not too long term like a daily, but it allows you to ride on those big moves that are happening in the market. So stay tuned. Next week, I think it'll be a great week, especially with the inflation data coming out. So till then, take care. Happy trading. Enjoy your weekend. We'll see you guys next week.